This summer, step into the Mediterranean haven of Malta. Crystal clear waters, ancient ruins, and towering cliffs. The iGaming industry is converging in Malta to take on everything from green courses, the hottest tournament tables, courts, lanes, and of course, the UNESCO city of Valletta for iGaming Next 2023. A week-long festival experience rounding up with the biggest high-end European pool party, Showers, celebrating its 10-year anniversary. Join over 4,000 senior delegates and top affiliates from all around the world alongside industry giants for an unforgettable iGaming festival week. iGaming Next 2023. Contact our sales team for sponsorship opportunities.
Hello everyone, welcome back to another version of iGaming Next Weekly News Live. That placing music just gets me in the mood. I think that's worth tuning in for alone, to be honest with you, let alone what me, Nico and Connor have to say. But yeah, I'm joined with the two regulars this week. Nico is powering through, even though he's a bit unwell at the moment. So Nico, do you want to update the listeners with how you're doing today?
Yeah, I'm pretty good. So I just returned from London, of course, as you can see. I got handed out a wristband by the Metropolitan Police, so I was part of the coronation. Fun fact, within the last three pretty much historical events in the UK, starting with the wedding of, what was it? William and Kate. I was part of it. I ditched the one with the two which kind of ditched the UK monarchy as well, and I returned for the coronation. So I made 2 out of 3. That's why my voice is just a little bit unhealthy. As of now, I'm in Hamburg, but I'm good. Thrilled for this week's edition. How are you, Connor?
Yeah, doing well, thank you. I suppose it's from all the singing of our British national anthem this weekend that you've lost your voice a bit. Thanks for sticking with us. But yeah, I'm doing well myself. I seem to have somewhere outside the window the Wimbledon Horticultural Society messing around with leaf blowers and hedge trimmers and things. So apologies in advance if there's any buzzing you can hear. I can assure you there's no kind of hidden device upon my person which is making that noise. It's all happening outside. So apologies for that. Jake, thanks for having us again. How are you, mate?
Yeah, I'm all good. It's that time of year, Connor. People trying to get their gardens in order before the summer comes around. But Nico, I'm really keen to understand more about your fascination with the British royal family and your attendance at these events. Where does that stem from?
So the thing is, so as soon as a historical event is just around the corner, and due to the non-existing COVID kind of restrictions anymore, I just tend to fly over just to be part of it. And I was touching down at Gatwick Airport at around 11:20. I was at Victoria Station at roughly 12:10, and you could just, although the weather wasn't in according to the historical event, just put it like this. Or getting along with the historical event, you could just feel the vibe all over the place, and I just love to be part of this one as well. So it's nothing in particular, but as soon as these kind of historical events just happen, and fun fact, it's the last coronation in the UK was 70 years ago, so they had some time to prepare for this one, and they did quite well.
Yeah, and how did it compare to the one 70 years ago, Nico?
Yeah, the one 70 years ago was good as well. So as you might assume, I'm a Highlander. That's why I tend to, kind of travel around for quite a while, or quite on a regular schedule, and that's why I tend to disappear for whatever reasons. But as it's just the three of us, I can share this kind of secret with you.
Yeah, well, no one does pomp and ceremony quite like the British. So I'm sure it was an excellent day. And I hope everybody in the chat also had a good weekend and public holiday. If they were lucky enough, hello to Vasela, who calls us ninjas. I don't know where that's come from, but she says, excited to hear what you bring today. Nasif also said he can't wait. And Elizabeth, our producer, said hello. So thank you very much for joining us. Please do keep the conversation going throughout. And a big thank you as well to our key sponsors, Playson, and also to Interactive and Hub 88 before we move on. Nico, I'm sorry to have asked you all those questions and put your voice under strain so soon in the stream. Are you going to be all right to do 10 and 5?
Yes.
Cool.
Just doing my best. Yeah, taking it away. So it's still result season. So Sportradar Q1 results show revenue growth and investment for the future. So the key Q1 metrics in the report of Sportradar indicated a revenue is up to 24%, which is 207.6 million year on year, while the adjusted EBITDA was up 37%, resulting in 36.7, and the total Q1 profit, however, was a little bit lower, 6.8 million, compared with the 8.2 million year on year last year, and this is just based on the heavy investments even Sportradar is doing in the AI space. Then we have another great deal to announce as Sky Sports renews their EFL, so the English Football League rights, roughly over 935 million pounds, running from the 24-25 season to the 28 and 29 season. The agreement will be made up of guaranteed payments of 895 million pounds and 40 million in marketing benefits. And it will result in 1,059 EFL matches, which will be broadcasted exclusively across Sky Sports. Then just staying in the reporting season or space, Nuvei, the Canadian company, says their Q1 revenue is up 20%, but they report a loss due to the Payer acquisition costs. The overall hit, the overall loss is reported with 20 million. And as said, the overall net loss is amounted 8.3 million. And as said, it's based on the acquisition of Payer. Then Light and Wonder Q1 revenue is up, losses down. So Light and Wonder, the Australian-based company, their revenue rose up to 70%, leading to $670 million in the first 3 months of Q1. And they reported a net income of 27 million for the quarter. And they still aim for their secondary listing in the Australian Stock Exchange as well. Staying in the stock exchange or M&A space, Better acquires the Chameleon platform from Fans Unite. Last week, also from Fans Unite, they sold off their Scottish-based MacBookie, and now they are selling off the gaming solution, including the player account management and the sports betting engine and casino management. So the overall software stack to Better. GeoComply acquires OneComply. Based on the names, each and everyone thought they are already belonging to one and each other. But it seems they are both Vancouver-based, and as of now, GeoComply obviously acquired OneComply. So they are now under the same umbrella. Then something big's coming up as Blackstone, one of the biggest companies in the world, actually favors an IPO exit of their Spanish Gambling Asset Group, CIRSA. They are aiming to at least get their get their existing long-term debt, which is accounted with 2.3 billion euros during an IPO, which will be quite interesting. Heading over to the US, as the Vermont House passes the bill to legalize online sports betting, and it will be the 38th state in the US to legalize sports betting. Then, staying in ruling, a German court rules in the favor of the German Gambling Authority, GGL, that they can penalize operators as soon as their affiliates violate marketing restrictions, which will be quite interesting to see. And shout out once again to the GGL, which is the biggest affiliate and running the biggest marketing campaigns for all black markets operations, as it will be even harder for licensed entities to actually gain some revenue in Germany. And last but not least, DraftKings finally launched their 24/7 channel on the Samsung TV Plus. So whoever owns a Samsung TV is now able to officially the ad-free offerings of DraftKings, and that's my 10 and 5.
And you survived, Nico. Fantastic job. And that was the closest you've ever got to 5 minutes, I think. So, yeah, awesome job. And we appreciate you plowing through even when you might not be feeling 100%. I'm sure a lot of viewers will be tuning in from New York this week, where SBC is happening. So hello, if that's the case. We're going to dive into some US Q1 results analysis a bit later on in the pod. First of all, though, let's start in Europe with some news that has broken over the last few days that could potentially be quite significant for Sweden and Sweden's licensed operators. Now, this has somehow turned into quite a complex story, so we're going to try and simplify it for you as best as we can. But basically, Sweden's Supreme Court has delivered a verdict on a historical case involving Genesis Global that has actually disagreed with the Swedish Gambling Authority over how financial penalties are calculated. That's the crux of the story. Now, to add some historical context here, Genesis Global was one of the first companies ever to be fined by the Swedish Gambling Authority about 3 months after the market regulated back in 2019. And the Swedish law states that if a company is going to be fined, it can be fined up to a maximum of 10% of gross turnover. That's what the law says at the moment. But the Swedish Supreme Court has actually come back after hundreds of appeals in this case and has ruled that turnover is perhaps not the most accurate or appropriate metric to measure financial penalties, because obviously it includes money that's due to be paid out to players in winning bets. So a lot of people in the industry have considered this means fines should be based on gross gaming revenue now in Sweden, which could potentially reduce the fines that are implemented on licensed operators, not only in the future, but perhaps those that have been imposed previously. Is that a fair summary of the story, would you say, Connor? I know you've read this one this morning.
I think so. Yeah, I think you've pretty much nailed it, Jake. What I thought was interesting to me, though, and what sprung to mind when I was reading this story was how often, or does this happen at all, does the Swedish Gambling Authority actually use that maximum limit to its limit? So it's the limit is there and states that fines or penalty fees can only be set at an absolute maximum of 10% of turnover, which, as you rightly identify, refers to handle and not GGR. Now, I think that it was interesting to see some of the commentary coming out. So Gustav Hofstedt of the BOS, online gambling what would you call it, trade association in Sweden has kind of supported the ruling and said, so I've got a quote here, that penalty fees should be based on GGR and not gross turnover should have been obvious from the start, since it is only GGR that the gambling company has at its disposal and can therefore use to pay any penalty fees. The rest of the money belongs to the gamblers and not the gambling company, which I think is fair. But then we have this other quote which says that penalty fees have been grotesquely high. Now, I don't know if perhaps I've not been able to find the same fees as Gustav's looking at, but when I've looked back today at some of the recent fees that have been handed out, none of them come anywhere near close to being 10% of annual turnover. So I've got a few examples. Bet365 had some fees in April. It was ordered to pay 80 million krona, 79 million krona, which I suppose is something like 7 or 8 million euros. And that was split between two different companies because their sports betting and iGaming operations are run through different companies that are licensed in Malta called Hillside Sports and Hillside Gaming. And those fees were set at 9% of GGR and around 20% of GGR. So obviously, I suppose if the intention now from the industry is to have them capped at 10% of GGR instead of 10% of turnover, then those fees do look quite high. But anyway, I'm rambling a little bit. To summarize, what I mean is that I don't think that 10% limit has actually been used by the Swedish Gambling Authority. And I think it was probably intentionally set at that high level to give them some leeway and mean that if there were any super serious cases, then they had the potential to go as far as 10% of turnover. But as far as I can see, that's never actually happened. One more example I've got of ATG, the horse racing Swedish gambling company, was ordered to pay 6 million krona out of its gross turnover of 26.5 billion. So that was about 0.02% of turnover. So when it comes to grotesquely high fees, I'm not sure which ones Gustav's talking about.
Yeah, no, fair enough. I don't think you were rambling, Connor. I think that was very coherent. And I also think it's important to point out that the 10% on turnover was supposed to be based on annual turnover from the immediately previous year. Which obviously wasn't possible at the time that Genesis Global was penalised in 2019 because the market had only gone live 3 months prior. So, perhaps that added some clouding to this initial judgment. I think they admitted at the time that they might have made an error, and it was reduced once, if not twice, in the lead up to this appeal. I think this may have just about drawn a line under the Genesis case now. Obviously, they're not even really a company anymore, so there's that to consider. But what this does do, as I alluded to at the start, is kind of open a can of worms slightly on previous rulings and whether other operators think that their penalties should be reduced based on this new criteria. Now, it's quite important also to point out, sort of conflicting to some reports, that the court hasn't said all gambling penalties from now on should be based on GGR. What they said was that in the case of Genesis Global, which, as we've pointed out, is probably a precedent, it wouldn't be appropriate. Now it's down to the Swedish Gambling Authority to consider whether they need to change their own metrics. And they provided a statement after the court ruling that said, all guidance from the highest court is beneficial for our continued assessments. In concrete terms, the ruling means we must re-examine the issue of penalty fees for Genesis Global, but then the key line is this. The authority also analyses what significance the court's conclusions may have in other cases regarding penalty fees. And I think there was some more feedback from the industry, Connor, on LinkedIn from Hero Gaming founder George Weston. I don't know if you've got the quotes open in front of you.
I've got it somewhere. Yes. What did George say? He said, rather directly, he didn't mince his words. He says, so you took a case to the Supreme Administrative Court because you thought turnover is the players' contributions, even though it was reported as net income in all gambling companies' reports for the past 20 years. A crazy waste, and no wonder you got a real slap on the wrist. That was his message to the Spelinspektion and the Swedish Gambling Authority there. So pulling no punches there, George.
Yeah, exactly. Nico, what did you make? What do you make of this sort of whole situation?
Yeah, so as first of all, our overall industry, so the gaming industry, is already quite stigmatized, right? So as soon as an operator gets slapped for whatever failing, the fine couldn't be big enough in the overall perception of people. But first of all, each and everybody should just calm down and just take a look at comparable industries. It's pretty much the same within banking. When you first of all have the assets under management and the revenues the bank makes on themselves. So they would never be any bank. They would never be fine based on the assets under management, as this is just the money they keep on accounts and just trade on behalf of their customers, which is pretty much the same in gaming as well. So the underlying should always be the revenues of the company or the company actually makes, which is then just within their books. And as said, I never heard about any bank being fined based on the assets under management. So there's literally no reason why in gaming it should be any other way.
Yeah, agreed. I think we're probably in alignment that was a mistake at the beginning of the regulation and possibly should have been corrected, before 4 years in or wherever we stand today. I'd like to welcome Danny and Bogdan to the chat. Great to have you both on board. As we move into our second story of the day, this time on Bet365, who have been ordered to pay 631,000 euros in compensation to 23 Danish sports people for basically using their names and their photos and their image rights on social media, but without their consent. Interesting parts of this story. So this was a decision handed down by the Danish Maritime and Commercial Court. But as Nico pointed out before we came on stream, we're not sure who filed the case in the first place, whether it was the athletes themselves, somebody acting on their behalf. But some big names were included in this, nonetheless, including Manchester United footballer Christian Eriksen and his international teammate Simon Kjaer, who was actually in action for AC Milan last night in their Champions League semi-final. He played terribly, so at least he's got some compensation to make up for that. But I had a quick Google before this to find out how much Christian Eriksen is on at Manchester United. So the ruling states that he's due to receive 195,000 euros, which will be the largest sum of any of the athletes. And he earns £150,000 per week already, just as a Manchester United footballer. So pocket money for him, but probably a welcome bonus anyway, you'd imagine.
Well, let's hope that he, decides to make a donation to charity, perhaps, with that money, seeing as it's pocket change and nothing more. Let's not forget, Jake, I don't know if you noticed my eyes start to glaze over as you started mentioning those big names to you, perhaps, but not to me. But, of course, let's not forget that Olympic badminton champion Victor Axelsen was also included in the case. So, big celebrity, big hitter.
Yeah. Yeah, well pointed out, Connor. That's a bit more in your wheelhouse. Shame there aren't any snooker players in there for you to write a miracle about.
There aren't any Danish snooker players. Not in the top 16, anyway.
No, that's right. But yeah, Eriksen, he basically pointed out during the case that he would usually receive about 270,000 euros per year for kind of, a sponsorship agreement with a company where they were allowed to use his image rights. But it's pretty fair to say, like, that isn't an example of this at all. This is, there's no commercial contract between both parties. This was just Bet365 using Danish athletes to promote various bets and offers. But some of the detail here is the key, and whether it was published basically for editorial use versus commercial marketing use. Do one of you want to sort of break that down a little bit for our audience?
I can try, and I shall try and save Nico's voice by jumping in. So it seems, yes, indeed, it was that the court ruled, and I suspect this was the crux of the final decision. The court ruled that the images were used as part of Bet365's business marketing and not part of its editorial content. So there are certain licenses that exist for images and the royalties and so on that you have to pay. So Getty Images, it happens with us occasionally. I see an image from Getty and think, I'd like to use that to illustrate an article, and the fee is something in the thousands of pounds to use it, and I think, perhaps I'll use something else. But it's not a cheap business, but when you pay for that license to use that image, you can only use it for very strictly defined purposes. Editorial content is perhaps the most common one. So if the Times was writing a news article about Eric Christensen, is that his name?
Christian Eriksen.
Close enough. Yeah, excuse me. If the Times was writing an article about him, that would be considered editorial content. They could use that image with an editorial license. Bet365 have obviously tried to argue that it was editorial content. And indeed, the court ruled that it was not. It was part of a marketing technique. It sort of reminds me, and this is slightly tangential, so I apologize, but it sort of reminds me once upon a time, I can't remember the company and I can't remember the country either, so that's helpful. But you were no longer allowed to advertise gambling operations on football shirts. But there was a gambling operator who had an editorial arm, which was set up as a separate company, and so it was operator's name News, which was an editorial website, and they advertised that instead. And so this distinction between what's a gambling business and what's an editorial business is
and that is a really good question. I think that was bets in Italy that you were talking about.
I thought it was
Star Casino, I think,
without being sure.
But that is a really interesting question. Especially with all these businesses like Better Collective, Odds Checker, all these affiliates that are really trying to position themselves now as kind of media conglomerates first, affiliates second. Like, can they ever really truly produce editorial first content over commercial first content? Well, not in the eyes of this Danish court, it would seem. But again, a bit like the Swedish ruling, this could open a can of worms, you would think, because there's no way that Bet365 has just done this with Danish sports people. It's probably done it, all over the place in almost every country that it's active in. So you might get, I don't know, Italy, for example, now come knocking on Bet365's door and saying, hold on a second, you've used our players' image rights without consent. So here's a tasty little payday for us. And also not just Bet365. It could happen to any operator, you'd think, as social media marketing is huge for gambling operators.
Yeah, quite right. Who knows what might happen next? Yeah.
Okay, that'll do for that one, I think. Moving on to our next story. So this involves a Malta-based casino operator called Gamix, and basically they've argued against some Finnish police allegations of illegal advertising, including some of which that was aimed at underage people, basically. So what's happened here is a police investigation's been opened in Finland because don't forget their national police board is in charge of regulating gambling. But Gamix has denied any wrongdoing. So Yeah, the police board has accused Gamex of using aggressive marketing tactics to promote its gambling games via various channels, text messages, web advertising, social media influencers, and even claims that they targeted minors through unsolicited text messages. Now, Gamex, of which friend of the show Phil Pearson and CEO of White Label Casinos is a director. He's contested this quite firmly. And he said that while we do operate in Finland, we have very high standards of responsible gambling and do not target minors or allow them to play. Now, I think Phil's biggest gripe with this story was that he found out about the details of the investigation after reading Finnish press reports. And I guess my question to either of you would be, is that appropriate, or should regulators inform operators at all stages of enforcement action kind of along the way, even while a case is ongoing?
Well, my thought is that police, I don't know the details of this case, but I understand it. Police, if they're investigating people, like to do that in a way that doesn't bring attention to it, so that if they're investigating what they suspect is criminal activity, the people who are under investigation are not able to then do things like destroy evidence or whatever it might be, cease all the illegal activity in advance of, an investigation taking place. So I think there's an argument there, and perhaps it's the result of Finland's gambling's enforcement being under the police, which might have a great deal more,
and the fact it's a monopoly model as well.
Yeah, so they may well have a great deal more rights to do that kind of thing than you would find with gambling regulators in other countries.
Yeah,
it seems. I think the unfortunate thing, to say the least, is that it was leaked in the press. I mean, you can imagine working at one of these companies and reading about yourself in the paper without having been informed of any kind of investigation taking place. It must have been quite a shock. But yeah, I suppose there's obviously someone's leaked that, I guess, from the police into the media, and that's got out in that way.
Yeah, this is the thing. I mean, so Phil basically said that the police board contacted Gamex to say that an investigation had been opened. So right at the start of the process, but then the company itself has claimed that, is this prejudice? Is this prejudicing or I don't know what the right word is there, but is this prejudicing, an ongoing case because the details are being leaked to the media? Is this going to allow due processes to be followed, basically? And their argument, as in a lot of these markets, is that they're covered under the European Economic Area and EU law to offer their services in those countries. But as we've seen in other places, Norway, for example, the regulators have a very different interpretation of those regulations. Nico, anything to add here before we move on? I don't want you to stretch your local cause too much.
So we pretty much had the same. I wouldn't consider this as an issue, but as soon as tax authorities or police start investigating on a company, first of all, as they are outsiders of the company, they need to get their kind of proof and arguments in line, and as soon as they literally strike and or inform the company, just remember Tipster. When there was roughly 1,000 policemen actually investigating at least double digits of retails. They just need to get their hands on the last and outstanding proof, as Connor already lined out as well. So first of all, they need to do homework, and then getting their hands on the proof what is still left. So based on this one, it just makes sense that investigation starts without informing the company, just to get your hands on things and just making things right. So these are just my bits and pieces.
Yep, agreed. Okay, we're going to move over to the US now with two big Q1 results that came out over the last week, starting, of course, with DraftKings, and we'll move on to Ballys. But one question for the two of you. Why is this Sunday significant?
What date is it this Sunday? The 14th of May. Is it American Mother's Day?
Close. I'll put you out of your misery. It's 5 years since PASPA was repealed. It's the 5-year anniversary.
Close, you're right.
How are you celebrating that, Nico? Are you flying over to the US as well with a Stars and Stripes blazer?
Probably, but I'm unfortunately I'm already in Dubai, and but it's a good argument. Maybe I would just line up with some US folks and then just celebrate this specific and special day with them as well.
Nice. Yeah, so 5 years, that really has flown by, hasn't it? Crikey. But DraftKings reported its Q1 2023 results this week. And it made pretty good reading on paper, you have to say. I mean, revenue up 84% to 770 million, smashing kind of analyst estimates, which were closer to 700 million. The Q1 loss came in at about $390 million. This was down 25% on the same period of last year. I think we've got a graph here that sort of puts those numbers into visual context. As you can see, revenue up, operating losses down, and EBITDA losses down. So on paper, a pretty smashing quarter. And a lot of this, Jason Robbins, the chief executive, said was down to their relentless focus on efficiency that has positioned the company well for continued sustainable success. So, as always, there was a little bit of split commentary on Twitter after the publication of these results. The first tweet we've got is from Alan Bowden, who is basically a co-presenter at this point on this show. He says, the business update from DraftKings is slightly mad. It really does read a bit like, well, things are going better than we expected, and we're not entirely sure why, but it's probably just us being awesome, so we're raising guidance. Thank you, Elizabeth. And exactly, they raised guidance off the back of these results. So they've raised 2023 full-year revenue guidance to 3.19 billion, up from 2.95 billion. And adjusted EBITDA guidance for the year was also raised to negative 315 million compared to previous forecasts of 400 million in losses. So Alan was quite skeptical, but DraftKings shareholders, meanwhile, basically rejoiced on Twitter, some of them at least. We've got another tweet to show you now from Mo, who I think we've also quoted on the show before. He says, today was an inflection point. There should be zero doubts going forward on DraftKings' ability to execute and be at the forefront of innovation. While companies have gotten desperate with overspending, DraftKings has stayed disciplined, all while creating the best tech and product for their customer. Thank you, Elizabeth. So quite the contrast in views there. I think the second one is a little bit too cheerleady for my liking, especially as, where was it? Sorry. Sales and marketing costs increased again by 21% to 390 million. So zooming out, what do you make of this Q1 performance from DraftKings, Connor? Is this an inflection point finally?
Yeah, probably. Why not? Fine. So DraftKings expects to break even in the second quarter and to reach almost 150 million in positive EBITDA by Q4. Exactly. EBITDA, of course, always to be taken with a pinch of salt, but is a metric used in the investor community very commonly. So, you know, it's certainly good. Better for it to be positive than negative anyway. So good luck to them for that. Their full year 2023 guidance is looking something like $3.2 billion in revenue. I think, you know, there is a strong argument to be made that the customer acquisition investments and product investments that they've made since 2018. They'll be sort of feeling very thankful that they appear to have paid off, or perhaps not yet, but appear to be moving towards paying off. Obviously, they have spent a huge amount of money in getting to the position that they're in. I think the danger when we're looking at growth is how fast can growth continue to take place looking forward. Nico, you said in your 10 in 5 that we have the 38th state ready to look at legalizing sports betting. So there are only 12 left. So it's pretty much nationwide at this point, I mean, even since Q1 last year, which is the comparative period, how many places have we seen go live? We've had Ontario, Ohio, Maryland, Massachusetts, all sorts of places. So several, new markets for them to go into, which probably contributed to the increase in revenue and the increase in monthly unique players and all these, quite positive looking metrics. So yes, perhaps it is an inflection point. That I think the product development they refer to is probably something to do with DraftKings catching up with FanDuel in terms of same game parlays. I think FanDuel, or bet builders as we might call them, or however you might want to call them, I think they were well ahead in the US in that respect for quite some time before DraftKings started to catch up. And of course, that's where the high margins are. That's where the big earnings are for a lot of these bookies, and that's where they want their players to be doing.
Yeah.
So, yeah, I'd say they're getting there. Just one more comment from me, which is that shareholders are kind of showing their confidence in the business again. Shares are trading at about $24 compared to $11 at the beginning of the year. So they're up around 120%. And I had a look at some target prices earlier from analysts, and I think a lot of the target prices tend to average out around that $24 to $26 mark. So DraftKings shares are sort of where they should be, quote unquote.
Yeah.
Nice. But they're still a long way from their all-time high of $72 in the March 2021 US sports betting boom in the stock.
Yeah. And I know some shareholders want to see management buy up some shares as well, put their money where their mouth is, so to speak. But I think some of the most interesting commentary in these results came again from Regulus partners, who pointed out that despite the sort of 84% year-on-year growth, that on a sequential basis, so from Q4 last year to Q1 this year, revenue actually dropped by 10%. And this was in part due to the US sporting calendar, which obviously gets pretty crazy around December time and November time. And this is a comment from Paul Leyland, who suggests that inflection point of profitability that we've been talking about for the last bloody 2 years or however long it is might not actually be that relevant anymore. He says the seasonality of US sports means that a good Q1 and Q4 is vital to overall performance. However, for DraftKings and others, good cannot just mean reaching the barbed wire of EBITDA break even. It needs to mean double-digit cash flow profitability to make up for the lean content months and the inevitable bad luck months. And then he signs off here by saying, with signs of underlying maturity in early adopting states and little progress on gaming, as you've touched on, Connor, the US online sector needs to deliver an awful lot more structural improvements to get out of its self-dug hole. And presumably that is a hole that has been dug with spades paid for in marketing dollars. I don't know if that works or not. I've said it now. Nico, you've been very quiet on DraftKings, which is not like you. Any final comments on the big US operator, or should we jump into to Bally's results?
Nah, all good. Head over to Ballys. Yes, each and everything has been said already.
Cool. Okay, so Bally's is a very interesting company, in my opinion, at least. They are in the middle of a kind of transformational period with this ongoing cost-cutting strategy that's been implemented by their new chief executive, Robeson Reeves. And a big part of that strategy, as has come out in the last few weeks, is that they want to shift their technology over to third-party suppliers in the shape of Kambi for sports betting and in the shape of White Hat Gaming for online casino. And this decision was taken after some acquisitions that they'd made to bring their technology in-house backfired pretty horribly. So they're kind of starting from scratch at this point, and it's 5 years since PASPA was repealed. So a bit of a false start from them, but the noises coming out of the company are definitely positive as of right now. They've said that the cost cuts are having an impact much quicker than expected. But even in spite of that, EBITDA losses for the North American online division are expected to still come in at about $50 million for this year. So racking up losses in digital. Luckily, obviously, they have their land-based segment to fall back on, and the former GameSys international business, which is also doing well in the UK. Connor, I don't know if you've got this story in front of you. Do you want to walk us through a few numbers from their resorts division and perhaps their international division as well?
Yeah, so total revenue for the quarter was just about 600 million, which is not to be sniffed at. 329 more or less came from the casino and resorts division, and international interactive, as you say, big in the UK. I don't know if they have other European markets as well. I suspect they do. That was an additional 245 million. So obviously making up the lion's share of everything that Ballys is doing, because the North America interactive division contributed just $24 million. So it's something like, 5% of group revenue, less than 5%. So it's a really small division for them. I think, 24 million in revenue, 10 million in EBITDA loss for the quarter. It's not exactly a shining example of a North American online business, but I think for me, and we kind of hammer this, I kind of hammer this point time and time again when it comes to the big casino operators in the US. The real value of these businesses is only going to be seen when they get that kind of dynamic setup right, where they've got this back and forth between their land-based and online customers. And there's a great potential in that, but obviously with the limitations on iGaming in the US, it's quite a difficult situation to work with. But I think over time, who knows? It makes sense that they're continuing to invest. But I think one of the things that their new CFO, is called Marcus Glover, he said that looking at the Ballys story and the entrepreneurial spirit of the company, we're still a speedboat right now. We can take advantage of opportunities by being a little more nimble. It's not often you see a land-based casino operator generating upwards of $2 billion in revenue a year being referred to as a nimble speedboat. So, obviously it's only a few weeks, it's only 6 weeks or so, I think, since Robeson Reeves officially took over from Lee Fenton, and Marcus Glover's just joined as CFO. So perhaps there are more changes afoot at Bally's.
Yeah, and he's qualified to make that call. I think, having spent time at both MGM and Caesars in his previous roles. There was one interesting part from the report on the US numbers, which related to New Jersey. He said the online market share in New Jersey for Bally's had recently surpassed 4%. As we've spoken about, the higher end of those market share percentages are all taken up by the market leaders at the moment. He said the state is contributing more than 1 million in profit per month. So yeah, it's just about how they get other states to be profitable as well. But this report came with some quite positive colour on the UK, and I think that's unusual, number one. And you probably wouldn't have them as a top tier UK operator, but they are certainly making a success of that market. They've got some really credible and established brands in the market, like Rainbow Riches, Jackpot Joy, Heart Bingo, Vera and John, and a few others. And they said that the UK grew by 9.6% year on year. And Robeson Reeves, the new CEO, was quite positive about the Gambling Act review as well. I think we've got a quote to show you from the story we wrote now, where he says, the regulatory framework in the UK has created a dynamic where smaller players are unable to compete, leading some to exit and allowing larger players who are already highly compliant to consolidate the market and gain share, which is a common trend we've seen all the way through as operators have been trying to introduce these safer gambling measures. Right, I think that'll do for our story roundup and our financial roundup this week. Nico, I just wanted to come to you so you can remind the audience where you are this week and what's been the hot topic of discussion where you are.
Yeah, so first of all, I'm in Hamburg, where we had a quite interesting digital exhibition, not hosted digital, but it was, aiming for all the digital companies. It is online marketing rockstars, and they, lined out the winners and losers of this year. So compared to last year, and what was quite interesting, if we just remember, especially Pierre. Our beloved Pierre is quite into the overall metaverse. Yeah, so the metaverse. Each and everybody was like, yeah, you need to spend big in the metaverse, and the metaverse is the next big thing. Metaverse here, metaverse there. Turns out there ain't much noise anymore within the metaverse space. Or, to give you one example, as of now, the highly appreciated Sandbox, they, as of now, have roughly 200,000 monthly users, while the almighty MySpace has 6 million monthly users. So who would have guessed that MySpace outperforms the metaverse of Sandbox by 30 times? So these are just the insights from the online marketing rockstars. You can look this up. It was quite an interesting exhibition with roughly 75,000 people. So it was a big thing here.
Yeah, no, it sounds it. And, I think that is a fairly obvious comment on kind of ease of use and friction and that kind of thing, and that MySpace is on the internet that we all know how to use and use every day. And I certainly don't know how to access the metaverse. And until those roles are reversed, I think we could be in this situation for quite some time. And it was interesting to see Business Insider run an article this week called RIP Metaverse, an obituary for the latest fad to join the tech graveyard. And I think we're going to write that one up for Friday's hot copy. So do keep an eye on that on our LinkedIn page as well. But Nico, London last weekend. Where are you now?
Hamburg.
London last weekend, Hamburg, and then Dubai via America this weekend. You're racking up those air miles, my friend.
Yeah.
Absolute jet setter. But enjoy your travels, and I hope you feel much better by this time next week. Thank you for joining us as always. And Connor, thank you very much for joining us as well. Some great comments today on a range of subjects. Thanks a lot to Bogdan and to Danny and to everybody else who's been commenting in the chat this week. And a final, last but not least, big thank goes out to Playson, Interactive, and Hub 88. Cheers, everybody. Goodbye.
Bye.
Bye.
Summer, step into the Mediterranean haven of Malta. Crystal clear waters, ancient ruins, and towering cliffs. The iGaming industry is converging in Malta to take on everything from green courses, the hottest tournament tables, courts, lanes, and of course, the UNESCO city of Valletta for iGaming Next 2023. A week-long festival experience rounding up with the biggest high-end European pool party, Showers. celebrating its 10-year anniversary. Join over 4,000 senior delegates and top affiliates from all around the world alongside industry giants for an unforgettable iGaming Festival week. iGaming Next 2023. Contact our sales team for